This week, we've got a lot of important data that will affect Bank of Canada's decision about interest rates next week. On Monday, we got the Business Outlook survey, which tells us what to expect. And then on Tuesday, we have the CPI data, which shows how inflation has already been changing. Now, if you want to learn more about how all of this will affect the Bank of Canada's rate decisions next week, stick around. Let's get started. On Monday, Bank of Canada's Business Outlook quarterly survey came out, and that gives us a peek into how things are changing up and how they might be changing up. Now, right off the bat, you can see that sentiments have dropped to its lowest level in 14 years if you take out that short blip that we saw at the start of the pandemic in 2020. Now, if we dive in, we can see that the concerns are also shifting. Up until recently, concerns were centered around supply issues, price pressures, labor challenges, supply chain problems. But these concerns are easing, which is a promising sign for inflation. You can also see that even though labor was still a big concern earlier this year, despite huge immigration growth in Canada, businesses now think that staffing isn't as big of an issue. They're right now not planning on laying off employees, which is good, but also not looking to hire more. And the intent to hire is definitely below the historical average. On the other hand, the spotlight is shifting towards demand concerns because of softening demand this year and expectations for a softer next year too, depending on how long it takes for inflation to come down. As you can see, inflation is still on the radar, and the concern now is that even though most businesses do feel that we will return to a 2% target inflation in the long run, the timing of when that would happen is even more uncertain than before, which is why we continue to have to keep an eye on where CPI is going. And the latest lagging September CPI data that just came out tells us that price growth is now experiencing broad-based deceleration, which is very hopeful. Numbers came in lower than expected, even in the headline inflation, even when we have gas prices accelerating high due to base effects on an annual basis, and also to mortgage interest seeing massive 30% annual gains. Now, food inflation is still higher than BOC would like it to be, but you can also see that prices are coming down for 3 months straight, which is also good news as well. Now, with inflation hopefully easing, but still not crystal clear, most banks haven't made big changes to their forecasts from before the September rate hike, with the exception of CIBC revising its projections downward because we didn't hit the 5.25% rate that they expected for September, and now they no longer think that this will happen. BMO also adjusted their forecast slightly too, now expecting high rates for longer, which is a common theme in the market these days. And just in general, the market feels that we probably are at the peak for interest rates, or we might at most see another 25 basis points of increase from here on. Now, I think the base case is that the BOC doesn't have to hike anymore, and the BOC might end up using that 25 basis point possibility of a hike as a verbal tactic to prevent markets from bouncing back too quickly. But even if it does, the actual impact of a 25 basis point increase won't be as big as before. A 25 basis point hike on a 6% interest rate results in a 4% increase, which is a lot less than the same hike on a 1.5% interest rate, which would have been a much bigger 17% jump. Now, in this market, how long it stays high for is definitely the bigger concern, which is why real estate buyers these days continue to be in wait and see mode. Most people do want clarity before making a purchase, and many still do prefer to buy in an upswing rather than the current uncertain times, which might become more and more certain as we approach next spring. And based on the current base case, confidence will gradually come back into 2024. And because of that, CREA now expects almost an 11% increase in sales activity in Ontario for 2024. And at the same time, because interest rates are still expected to be high For 2024, CREA doesn't expect big jumps in prices. Now, CREA does project that prices will be 6% less year over year by the end of 2023 compared to end of 2022, and then into next year, prices will likely stay more or less unchanged. So based on this outlook, you might think that there's probably not much of a benefit to buy today. But here's another way to look at things, and I'll walk you through this through an example. A buyer recently swept up this property in prime Toronto a few days back, which turned out to be an amazing deal. And here's the backstory. This property was listed with another brokerage, and the sellers tried to list it at $1.35 million with an offer date in mid-September in hopes to sell for over $1.4 million. Now, unfortunately, it didn't work out as expected, with listings flooding the market and bond yields doing a big climb up as well. And so they ended up relisting it closer to the $1.44 million mark, which is what they wanted, and the house continued to sit on the market. After a few weeks, there was a big price drop to $1.35 million. And then quickly after that, a few days later, it eventually sold close to $1.3 million. And that's almost a 10% discount. Now, the numbers look great at $1.3 million with big positive cash flows when you split this house into 3 units. But what really sets this house apart is the big laneway suite potential here. You can build a massive 3-bedroom laneway suite here that might give you another $4,500 in rent. And when you do this, cash flows jump up to over $5,000 per month. With today's higher uncertainty, the huge advantage is the chance for deep discounts on individual deals that probably won't be around when confidence returns. You can also end up getting a better choice of options, and it might end up being easier for you to find something that checks all of your boxes. Houses with huge laneway suite potential are definitely more rare and always more desirable for obvious reasons. So once the market does bounce back, they might not be readily available. And even if you do find one, there will definitely be a lot more competition for it. So the buying experience will definitely not be the same as it is now. So if you are interested in taking a closer look at today's market and what the best real estate investment opportunities are, just reach out to our team. We specialize in investing in freeholds in Toronto, and we're more than happy to chat with you. Just take the first step to book a Zoom discovery call with us by heading to this link right here. Finally, if you found this video helpful, show us your support by giving this video a thumbs up and hitting that subscribe button to stay updated with our content. Our channel covers a wide range of real estate and investing topics in Toronto, from market trends to housing policies, interest rates, and investing strategies. We're here to make your real estate investing journey easier for you by offering services like planning, analysis, buying and selling, renovations, leasing, and property management. For more information, visit our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.